Hello mga kamaniwise! Welcome back to my channel. In this video, pag-uusapan natin ang top 3 REITs in my signature dividend portfolio that I plan to buy and hold for the long term. At bakit ako bullish sa tatlong REITs na ito. Ang mga REITs na ito, particularly A-REIT and C-REIT, have been among the best performing in the PSE. Mataas ang 1-year return nila, which is really good, plus dividend returns pa. I'll briefly explain REITs para sa mga newbies na gustong mag-invest sa REITs. Imagine gusto mo mag-invest sa real estate properties, pero buying a whole property is expensive and complicated. Diyan pumapasok ang REITs. Kapag bumili ka ng shares sa isang REIT, parang nagiging part owner ka na rin ng properties nila. Ngayon, instead na ikaw ang mag-collect ng renta sa mga tenants, ang REIT na ang bahala doon. Dahil marami silang properties, tuloy-tuloy ang income nila. And they are required by law to distribute a large portion of their income to shareholders as dividends. At least 90% yon. So REIT is a great option for passive income because it pays quarterly dividends and meron ding potential to appreciate ang share price over time. Pero not all REITs are created equal. Kaya we need to choose those with strong fundamentals and growth potential. Here's my signature dividend portfolio allocation. Makikita mo ang aking signature portfolio sa Dragonfly platform. Number 1 holding ko na ang RCR at ang aking dividend yield on cost ay 7.38%. Pangatlo na ang A-REIT kasi hindi ako makapagdagdag ng maraming shares kasi tumaas na ang share price. Buy on dips lang ako to add more shares. Ang dividend yield ko on cost ay mataas pa rin naman at 6.89%. Ang C-REIT, mataas na rin ang share price kaya hindi rin ako nakapagdagdag ng marami. I want to buy as low as possible. Ang aking dividend yield on cost sa C-REIT ay 7.5%. Let's start with A-REIT. A-REIT is the first, the largest, and most diversified REIT in the Philippines. It is also the first REIT to be included in the PSI, the Benchmark Philippine Stock Exchange Index. Ang A-REIT's sponsor is Ayala Land Incorporated, one of the country's largest and most reputable real estate developers. Nag-IPO ang A-REIT noong August 2020 at ang kanyang IPO price ay 27 pesos. And then A-REIT's share price has increased by 47% since its IPO. Na-outperform ng A-REIT ang kanyang sponsor, Ali, in terms of share price performance. A-REIT started with 3 properties nung nag-IPO in 2020 with a gross leasable area of 153,000 square meters. A-REIT's portfolio consists of a mix of offices, hotels, malls, and industrial lands with a combined gross leasable area of 3.9 million square meters. A-REIT completed 6 asset infusions last year. These strategic asset infusions have significantly contributed to A-REIT's strong financial performance and positioning it for sustained growth. Ito naman ang performance highlights ng A-REIT for the first 9 months of 2024. Hindi pa available ang 2024 annual earnings report. Based on this, A-REIT continues to grow with higher revenues, net income, and property assets. Mababa rin ang utang ng A-REIT which indicates financial strength and low risk. Solid na solid pa rin ang performance ng A-REIT at strong buy and hold pa rin ang A-REIT para sa akin. Mataas ang occupancy rate ng A-REIT, 100% sa industrial lots and hotel, 99% sa retail, at 94% naman sa offices. Ang overall weighted average lease expiry ay 21 years, which is very good. 4 years naman sa offices. A-REIT's asset under management has grown significantly since 2020 from 27 billion pesos noong 2022, ngayon nasa 117.6 billion pesos na. This significant growth is a result of continuous property acquisitions and portfolio expansions. It is diversifying beyond office spaces by increasing its exposure to retail, hospitality, and industrial land. Ang office properties nag-decrease from 88% in 2023 to 76% in 2024. And then retail grew from 8% to 11%. At nagdoble naman ang hotel assets from 3% to 6%, and industrial land expanded from 1% to 7%. This diversification strategy can enhance portfolio stability and reduce reliance on office properties. In terms of dividend, AREIT's dividends per share have grown. Ang full-year payouts started in 2021. So from 2021 to 2024, dividends increased at a compound annual growth rate of 10%, reflecting consistent and steady growth in payouts for investors. AREIT's strategic plan focuses on growth and diversification. It aims to increase its assets under management to $3 billion by acquiring a mix of offices, malls, hotels, and industrial properties to reduce sector risk. AREIT's growth strategy also involves capitalizing on ALI's flagship commercial assets. Long-term uptrend pa rin ng AREIT. Share price is above its 50-day and 200-day moving averages. Para sa mga gustong bumili o magdagdag ng shares, buy on dips sa support ang recommended strategy. Based on technicals, if price pulls back to the 37.4 to 38 pesos, it may be a good entry for long-term investors. At the current price of 39.8 pesos, mababa na ang dividend yield at 5.8%. Buying at around 37.5 pesos can give a dividend yield of at least 6%. Next is CREIT, City Core Energy REIT. Ito ang first renewable energy REIT in the Philippines. CREIT is sponsored by City Core Renewable Energy Corporation, and it offers a unique investment opportunity. It generates income from a portfolio of renewable energy and land assets, ensuring stable long-term rental income. Nag-IPO ang CREIT noong February 2022 at ang IPO price ay 2.55 pesos per share. And share price has increased by 24% since IPO. CREIT started with 5 properties bago nag-IPO. And then in 2022, they acquired more properties in Bulacan and South Cotabato. In 2023, they acquired even more properties, including very large ones in Pangasinan and Batangas. This growth is essential for increasing their rental income and the dividends they can pay to investors. Sa ngayon, meron na silang 14 leasable assets, 7.1 million square meters total leasable area. 100% ang occupancy rate ng CREIT at meron din siyang longest weighted average lease expiry of 20.69 years. Here's the performance highlight of CREIT in the first 9 months of 2024. CREIT's revenue, EBITDA, and net income all increased, driven by steady rental income from its operations. Medyo maliit nga lang ang growth percentages, but they indicate a stable and positive trend for the company. The EBITDA margin remains strong at 98%, which means that CREIT is efficiently converting its revenue into earnings before expenses. This highlights CREIT's geographically diverse revenue base across Luzon, Visayas, and Mindanao. Total revenue reached 1.379 billion pesos, with revenue contributions spread across various locations. Ang top contributors ay Batangas and Toledo at 20% each, followed by Silay and Clark at 15% each. This diversification reduces risk and strengthens CRIT's income stability. From 2022 to 2024, nag-grow ang dividend at a compound annual growth rate of 10%. Looking ahead, CRIT's future growth appears promising. Sponsor projects construction is in full swing, including key sites in Batangas, Pangasinan, and Pampanga. These assets represent significant potential for future infusion into CRIT's portfolio. CRIT has also retained its PRS AA Plus credit ratings from Phil Ratings. This high credit rating reflects the strength of CRIT's capacity to meet its financial obligations with very low credit risk. Long-term uptrend pa rin ang CRIT, trading above its 50-day and 200-day moving averages. Consolidating ang share price in a tight range around 3.17 to 3.2 and neutral level ang RSI. At the price of 3.17 pesos, dividend yield is 6.34%. Next is RCR, Robinson's Land REIT, sponsored by Robinson's Land Corporation. Third REIT na nag-IPO in the Philippines ang RCR noong September 2021. It had the largest REIT IPO noong time na yon. IPO price was 6.35 pesos per share. So, mas mababa ang share price niya ngayon versus IPO price, down by 7%. RCR has demonstrated aggressive expansion since its 2021 IPO. Nag-grow ang kanyang portfolio from an initial 425,315 square meters of gross leasable area to 827,807 square meters in 2024, a remarkable 94% increase since IPO. While its initial assets were primarily office buildings, strategic infusions have diversified RCR's holdings. Noong 2022, GLA grew by 13%. And then, noong 2023, GLA remained the same, still mainly office spaces. Yung 2024, yung pinakamalaki ang increase, so 72%. This diversification into retail properties strengthens RCR's revenue streams. For me, RCR remains a buy and hold investment due to its consistent growth, diversification, and strong sponsor backing, making it a solid choice for long-term dividend investors like me. So in terms of financial performance, RCR is doing really well with significant growth in revenue, distributable income, and AFFO. The newly acquired assets are expected to contribute even more to RCR's performance going forward. So sa ngayon, RCR owns 29 properties spread across 18 key locations in the Philippines. Recently, they added 13 new properties, mostly malls, making their business even bigger. RCR still has a lot of room to grow in the future. It has a strong pipeline of potential future assets, including over 1.3 million square meters of mall space, more than 250,000 square meters of office space, and around 280,000 square meters of logistics space, and approximately 4,000 hotel rooms. RCR is not just growing today. Meron siyang solid plan for future expansion, making it a promising investment for long-term dividend investors. Ang average occupancy rate of RCR is 96%. RCR's overall weighted average lease expiry is 2.7 years. So, mas mababa compared sa A-REIT. Office spaces are a bit longer, averaging 3 years. And then, mall leases are shorter, averaging 2.14 years. This is typical as small leases often have shorter terms to allow for flexibility and changes in retail trends. Merong leases that will expire soon in 2025, giving RCR a chance to renew at higher rates. RCR has a balanced lease structure. In terms of dividend growth, RCR's annual dividend increased, growing at a compound annual growth rate of 7%. Regular dividend lang ito, hindi ko sinama ang isang special dividend noong November 2024. Long-term uptrend pa rin ang RCR, trading above its 50-day and 200-day moving averages. At ang share price ay nagko-consolidate in a tight range. Based on technicals, if the price dips sa 5.92, it will be a good entry point. At the share price of 5.99 pesos, dividend yield is 6.63%. Mataas pa rin naman even at the current price. I'm following a buy on dips strategy to add more shares as long as makip ko pa rin ang average price ko below my buy below price at makip ko ang target yield ko of above 6.5% for A-REIT and above 7% for C-REIT and RCR. So, kailan ako magbebenta? I'm in for the long haul. Ang focus ko ay both dividends and growth over the long term. For me, the key is the company's financial health and its ability to consistently pay dividends. Ngayon, pag pumangit ang financials at bumababa ang dividends, I will reevaluate my positions. But until then, I'm holding my A-REIT, RCR, and C-REIT.